following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. This session of the TFNN is coming to you from Davos, Switzerland today, folks. We have to be over there to make sure everybody gets all these economies right. It's a beautiful day over there. It's about 31 degrees with lots of snow, and if you believe I'm there, I still have 2 shares of the Brooklyn Bridge for sale for you. Folks, we're going to take a look at this lunar eclipse that we had yesterday. It was really spectacular here in the desert. I mean, it was, you could almost reach out and touch the moon because we were at perigee. It was really a spectacular sight. The problem with these things, folks, is they don't work all the time. Sometimes they work like clockwork. Other times they invert. If you look at where we were, way back in 2000, I believe in 15. Let's just get this up here, and you'll be able to take a look at it. You'll see we had this on the 28th of September. We had a lunar eclipse and full moon at perigee. That was spot on at the bottom. Now, what are we doing this time? Is we could be setting right at a top. That's probably, you know, what you're looking at. So we'll have to wait and see. There's something else that's out there, folks. It's what's going on with social media and all this stuff it's reaching extremes like I've never seen before. Notre Dame University is now going to cover the murals of Christopher Columbus that go through the dormitories and the buildings there. I'm just going to show you, folks. I hope TFNN doesn't get angry with me for posting this very, very offensive picture of Christopher Columbus on his deathbed. You can see how offensive it is, with all the Padres sitting around there. I don't know why it's offensive. Maybe because they don't have a rabbi there. I don't know what it is, but pictures like this, I mean, give me a break. There's a guy on his deathbed that discovered America, and probably there's an argument about that even. But anyway, one of my favorite places to travel to in the United States used to be Vicksburg, Mississippi, when my good friend Jay Cross had a bread and breakfast there. It's about 90 miles from Jackson, Mississippi. There is a beautiful state of Civil War memorial park there with all the beautiful statues of the War of Vicksburg, and the people in Vicksburg used to be on the hill and overlook and they used to watch the fighting going on. And they, you know, now they're covering up these statues and covering up things like this. I mean, this is our history, folks. This is not good. I don't know what's going to happen with it, but boy, oh boy, this is, I don't get trouble very often, but when I see things like this, it really bothers the heck out of me. The Notre Dame thing bothers me because my nephew, Larry, who's named after me, was an extremely good football player in Indiana. He had a scholarship to Indiana University, Purdue, and what other one? I think he was at also, he was at, I think, Texas A&M, and he was accepted at Notre Dame. And 2 weeks before he was supposed to start school, they found somebody else that they wanted to bring in for the scholarship. So they took his scholarship away, and Larry ended up going to Indiana, where he ended up being a very, very good player, and actually played 1 year with the Indianapolis Colts, and was able to get a nice house from the 1 year that he did play. Anyway, let's move on to some of these markets that we're looking at. Folks, we've had one heck of a rally here. 7% in 1 month. Are you joking me? This is an incredible rally that we've had. Now, where we're sitting right now, and we're going to take a look at this because I think this is you know, something that I think is important, is that we are looking oh, yes, the world is going to end in 12 years. Well, yeah, well, Alexandria Cortez, I remember they interviewed her on the TV just recently, and they asked her about Roe versus Wade, and she said those were the 2 ways that the Mexicans crossed the Rio Grande. So maybe she will not be into politics too long, but heck, she might be the first women president. You never know. Anyway, let's take a look here at this E-mini S&P. You see we're really close to the 61% and 78% retracement. We are down. We got down as low as about 30 handles on Friday, and excuse me, overnight. By the way, I'm sorry to laugh, folks, but you guys caught me in a really bad gaffe over the weekend. I was doing the newsletter, and because I knew we had a holiday, so I wanted to take a day off. So I was up at 2:30 in the morning, and I sent out the futures part of the newsletter, and I titled it President's Day. And why I did that, I don't know. And immediately, I really got some of my friends came back and said, you know, Martin Luther King was not a president. I already knew that part. Why I did it President's Day, I'm not sure, because President's Day, of course, is in February, not in January. Anyway, we corrected it on the big part of the newsletter, and so we got that part taken care of. The key to watch today is the fact that these eclipses, sometimes they only last for a very, very short time. Sometimes they're very, very powerful. Other times they're not. So we have to pay attention to that. The fact that this has had some type of a turn, the fact that we're 25 handles lower than we were on Friday is important. But remember, these markets come storming back for no reason at all. So let's keep that in mind as we look at that. Now, one of the things that I think looks the most interesting today, and most of you folks don't trade it, but we've been following it here quite a bit, and that is the natural gas. You have to look at this, folks. This is the pork bellies of the energy complex, but boy, does it rock and roll. So from January 10th, folks, we went to 294 to 372. That is only $9,000, and then we came down 5,000, up 4,000, down 5,000, up 3,000, down 5,000, up 4,000, and now we're coming down to be down another 4,000 if we get down to 311. 311 is what we call something very important. You'll notice that the gap that we had on January the 11th, okay, we gapped there. We gapped up 30 handles, and we ended up being up 50 handles for the day. And now we're coming down. Now, this is in the midst. Remember, this was just January 14th, just about 8 days ago, when this big storm came in. I don't know what the name of it is, Harper or something like that. But that storm was a terrible Arctic storm, supposed to be the worst of the season so far. It has been. But natural gas doesn't care about that, does it, folks? Ever since that high on January 14th, we've had 1, 2, 3, 4, 5 major lower tops. So this is just a correction. Now, we're coming in to fill that gap, and that's going to be really important. And of course, right there at 311 sets the 78% level of that whole move. Below that, you're going to be seeing, the natural gas down below that 290 level if it doesn't hold that level. So pay attention to that one. We're going to be watching it here just because it is a 3 drive. That is absolutely correct. It is spot on. By the way, this past week, we were very fortunate. We had 2 of our friends and students that we've trained over the years to come in and visit us, and we had a really lovely time visiting with them, and it's always fun to have the folks that have been here to look at it. Now, what I'm going to do tomorrow is I'm going to pull out a couple of old things from the past to show you things that made me change my way of thinking about A, risk management and money management, and 2, how to find why I don't look at fundamentals. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a chart of the euro. This comes from one of our friends over in the beautiful Valley of the Sun over there in Las Vegas, Nevada, and he thought it was rather interesting. And basically what it's showing here is the euro, and it shows the 200-day moving average. And I don't use moving averages because my good friend Amos Hofstetter, well, he wasn't a good friend, but somebody that I'd met several times, he had always made the comment that moving averages are just what they say they are. They're moving and they're average. What we're looking at here is you'll notice how many times this euro has been following this down channel. And if you notice a little price that the person had there at 11344, well, folks, we just hit that level. We just made 14337. That's right in the zone where the euro should find some, very, very strong support. And of course it doesn't. Then it's going to go a whole lot lower. I covered that in the foreign exchange section of the newsletter because we're at such critical levels in some of these that it's very, very interesting to watch, how in fact they do unfold. Now we've had a request to take a look here at the dollar versus the Canadian. Now I just wanted to bring to your attention, folks, I did natural gas already. I'll do it again here in just a minute. Hold on here a second. You'll see here they were right at a 382 retracement with an ABCD pattern here in the Canadian dollar. This is the first rally that we had since we made the major big number up there. So that's it. We want to pay close attention to that very, very closely because we're at a real interesting spot here. To do that. No, we'll do it again for you, and there's nothing to be sorry about. We'll just get this natural gas up because it is, I think if I had to do a chart of the day, this would be the one that I'd be doing, folks. Look at the natural gas. We're down into that gap area. In fact, we've touched the gap area right now. We're looking at 311 as a potential buy. You don't have to risk much. And remember, this thing moves like nothing else that we trade. This is the wildest thing on the market. Even wilder than the stock indices, gold, silver, you pick anything. This is wilder than anything. And when you add what the margin is to this, to the volatility, this is trouble in River City if you don't know what you're doing. That's a really wild one. Coffee, I'll cover coffee too just a little bit. Guys, you guys are asking me all kinds of questions today. And since that's you, David, you're up. I'm going to get the coffee up because I really like the coffee. I haven't traded coffee since Hector was a pup, and that was a long time ago. We'll just put up here in, oh, yes, natural gas is much wilder than anything. It's really crazy. Here's coffee, folks. When it got down to $100, that was a beautiful retracement there. It was a 135 pattern. We had it suggesting very good support. Now we're starting to move again. I believe that coffee has the possibility. You notice here, just since last August of 2017, that we got as high as 144. Folks, coffee has been as high in the last few years, as high as 270. So this thing, if it goes, it could really go a long, long way. And the weather reports that we get from our good friend Rich Anderson and Simon Lee are suggesting these longer-term reports, which are not trustworthy, but they still pay a lot of money for them. There's a potential for some problems to come into the growing season in some of these. So that's something that I think would be really interesting if, in fact, it does happen. That's a key thing to pay what I think pay some close attention to. But whether that's going to happen or not, we'll have to wait and see. Regarding that euro, if you'll pay close attention to the euro, folks, you'll see that support that we have in the euro is just absolutely spot on down there. It's not similar to the pattern that we posted because that had moving averages. But with the euro, what you're looking at, of course, is a market that is setting right at major support, and we'll get this up here so that you can see here a little bit different way of looking at. So far, the low that we've had this morning, let me get this up here so you can see it here. The low this morning has been 113.37. So we went down and touched that 61% retracement. Now here, you're going to see some cycles here, folks, and this was covered by Jake Bernstein in the seminar that they had Saturday for the Foundation for Study of Cycles. What he was looking at were nominal cycles. If you'll look at the period between November and where we are right now, you'll see the nominal cycle of a 34-day, and then there's also a 24-day cycle, and then the smaller cycle is the 12-day cycle. And here it is bottoming right in here when we have the lunar eclipse and full moon. So this is something, and if you look at it really closely from December 17th, look at the move between December 17th, January the 4th, and where we are right now. That is a 135 pattern. That was the pattern that good friend Bill and oh my goodness, it's amazing. Sometimes I don't know what it is. I guess it's old age that I can see these guys standing in front of me. Oh my goodness. Anyway, this is what we're going to be watching here. It's a 135 pattern. Really an important pattern. So we want someone of you guys help me out what that 135 pattern is, because I can't remember. Bill and Roy Longstreet. Just go through the alphabet like Sarah says, and that's what we're watching here. So pay attention to that. That's a very low risk buy in my opinion, because it's got cycles, it's got pattern, it's got harmony, it's got ratio. It's got the whole 9 yards. Whether it works or not remains to be seen. How much you risk on something like that? Well, you're looking at a contract that's worth about $111,000. So we'll be able to look at that. Tucker, I'm going to cover the gold and silver next, and that's especially true of that. But we will be watching the euro here. I would not risk more than 30 pips, $300. That's an acceptable risk. If you get below that, boy, there's something certainly wrong with that one. That would be for sure. Now let's give Tucker's question up here. Here's what we talked about over the weekend, and that is she's not just a great helper, she is beyond great. Hold on just a second. Put this up here. Thanks again, Marshall. We enjoyed seeing you guys, and you're welcome down here anytime. You're almost a resident now, Bubba. All right, here's gold. This is a 4-hour chart going back over the last 6 weeks. You can see the beautiful 382 pattern that suggested the high up there at around that 1298 level. The high was 1300. But look what's happened since January the 3rd, folks. We've been in a very tight trading range between 1300 and the 382 number that comes in at 1275. And you'll never guess what the low was Sunday night. It was, yes, spot on. 1275.80 was the exact low. We rallied up to 1284 since that level. The one thing I feel very, very strongly about, folks, if we get above 1300 on a closing basis, you don't want to be short the gold, because this market looks pretty good. On the secondary part of this, if we do get below that 1275 level now, we could easily go down and test the 1260, which would be extremely important, because that would be down $40, which is close to that $34 number. We'll cover silver next. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to bring up the chart of silver. This is what we were looking at over the weekend, and as the next chart we're going to put up is going to be what's happened over these last 2 days here. You notice that we did hit the exact 382 retracement in silver, just like we did in the gold. So if it comes out of here, don't be surprised. But if it goes below those numbers, that tells us that that is a pretty significant top in here, and we're going to find out if that's going to hold the market or not. I wanted to spend just a second here talking a little bit more about that Columbus stuff that's going on at the University of Notre Dame. Columbus was an Italian, and one of my favorite people in this business of technical analysis is Peter Eliades of Stock Market Cycles up in Santa Rosa, California. And I met Peter, gosh, 50 years ago, and he lived across the hall from my good friend and buddy, Eddie Horowitz. And so what happened, we would have these meetings, and Peter would be one of the speakers occasionally. He was a musician, actually. He played the piano and clarinet, and he was very, very talented, but he did the trading on the side until he got so good at the trading that he abandoned the musician part and went into the business full time. But one of his lectures, he would bring up a picture or a little egg, an egg, and he would show the egg there, and he says, "I try to get this egg to, to stand on its end," and of course it's elliptical and it keeps falling all over. And he would pass the egg around, and people would try to get it to stand up, and then he would give the egg back to Peter, and then he would tap the bottom of it, and of course it was a hard-boiled egg that nobody knew, and it would stick right on the bottom. So I'm giving my first lecture, 1996, at Beijing University. I've got 300 students in the room, and I'm going to show this trick. Man, I'm all ready for this. So I pull it out of my pocket, and I get ready to do the trick, and I hear this hissing and laughing, and these kids are, they're just like, U.S. students, only they're a little bit more susceptible to adults. They treat them with a little more respect. And so I said, uh-oh, I've really blown this. And I asked one of the students, I said, what's wrong? And they says, we learned that in the second grade. And so that's how I started the lecture. You think that's not tough? But I bounced back, and it was 2 hours. Basically, I was there from the Chicago Mercantile Exchange for those years to try to show these folks that capitalism was coming to China. They were going to have futures markets and stock markets and how it operated and how you made money, what the lifestyle was, what you had to do. And so I went through the whole, I had slides and stuff, so it was really great. But when you walked into the room, it was one of those auditoriums, sloping way up, and it was a lot, it was filled, 300 people. In fact, there were people sitting in the aisle. Anyway, what happened was, as I started to talk, the main thing that they wanted to know about was the lifestyle. How did you get paid? How do you make your money? That kind of stuff. What kind of car did I drive? It was really amazing. But anyway, that was a long time. I did that for 10 years. I was there, I think, 3 times a year. For 10 years, all of those years. I went over, I think I was in 16 different cities in China over that period of time, and I really enjoyed it very, very much. Beautiful country, and the politics are a little bit different. One of the things that happened when I was in one of the hotels, I was watching the news, and of course, this was going back many years ago, 20 years, so all we really had was CNN, and anytime they would mention anything like Tiananmen, boom, your electricity would go off on the TV. They would just switch off. You'd see a test pattern. So there were key words there whenever that happened that they would be blocked out. But that doesn't happen anymore. But I told this other story is when President Reagan died in Beijing, they have a colonnade of where the embassies are, and all the embassies dropped their flags to half-mast except France. And China complained to France about that, and France says, we're not going to do that. And so China didn't do anything. All they did was turn off the water and the electricity. And it was in the middle of the summer. It wasn't very long till the flag came down to half-staff. Amazing how that works, right, folks? Anyway, let's move on here. And someone's asked me a question about the shutdown of the government. Boy, I don't know. All I know is Sarah and I live 72 miles from the Mexican border, and there's a wall there at Nogales, and it stops people from bringing truckloads of drugs in. You can't stop people from, swimming across the river or climbing across it, crossing the desert. You can't stop that, but, you can stop, heavy drugs coming in just through trucks and stuff. I don't know. Let's talk about the markets. I don't want to talk about that stuff. I really don't. Let's move on here to just a little bit. We've got another pattern that I wanted to mention to you. Just give me 1 second. My beeper is going off, and I have to double check to see what is happening because I have an order, and I wanted to see if it's in the zone. And it is not in the zone at all, so I'm not going to worry about it. Okay, let's move on to one of the other markets that someone's asked us about, and that is the old Treasury bond and Treasury note market. And I believe that we are getting ready to see another leg down in the bonds and notes. You notice here on the long-term weekly chart, we had that head and shoulders pattern that finished last year. We had the rally that was just equal to the same rally that we had during 2017. That was almost, in fact, it was a 2-month rally, and it stopped pretty much where it was supposed to stop, and we're trading a little bit below that level now. If we do get above that 124 level, which is equivalent to 150 in the Treasury bonds, then I would say I made a serious mistake here, and maybe this market's going to rally a little bit more, but we'll have to wait and see. So let's remind ourselves that these markets have a tendency to go a lot farther than we might think at times, and that's the key thing that we need to worry about. Remember, we had 2 weeks ago, actually it was 3 weeks ago, we had Tim Boston from Financial Cycles Weekly, and he gave us this little chart, and I kept it because I thought it was really cool about what was happening in the market. And if we take a look at this, you can see this is his modified Bradley model. You'll notice that low that he was looking at around the 21st of December, it actually came in on the 26th. And then, we've had this really big rally, and we are pretty much at point number 4. You'll see there, point number 3, you'll see is the lunar eclipse, and then he's looking for 2 days later here on the 4 days later on the 25th, which is Friday. There's another one here. So if we get a little bit of a move down into Friday, and then we have this run up into this this February 13th is going to be very, very interesting to really take a look at, because that's pretty much what the Bradley model is looking at. So this we'll have to see, but we really haven't sold off very much. We're only off 25 points in the S&P, so it's not really that much. At least that's my opinion of what's going on. Oh, one other statistic that I found very interesting. We have a friend over in New Zealand, and I was chatting with him over the weekend, and he was telling me about Peter Thiel. I don't know if you know this or not, but Peter Thiel was granted New Zealand citizenship back in 2011, and the reason why is that, we got a break. We'll get back and we'll talk to you just a little bit here after we take a break and pay a few bills. 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, I want to finish the story about Peter Thiel. New Zealand granted him citizenship in 2011 with the hope that he was going to bring in a lot of these tech companies over to New Zealand. Here it is 2019, and they haven't got any of those, so we'll see what happens. However, what's interesting story about Peter Thiel, he was one of the angel investors to a company called Facebook way back in 2003, and he bought 10% of the Facebook stock before it was issued, of course, at $500,000 US. I don't think I need to tell you that turned out to be a pretty good investment. But another story that one of my friends from New Zealand shared with me about Facebook is when they were putting their offices together in the Silicon Valley, they had a graffiti artist getting ready to do some really beautiful graffiti artwork, and he was going to charge $6,000 a week to do this, and Mr. Zuckerberg thought that was too expensive, so Sean Parker, one of the angel investors, says, why don't we give him a stock option, and that way it won't cost us anything. Well, guess what, folks? That $60,000 stock option ended up costing Mr. Zuckerberg $50 million. Can you believe that? Shut the front door and raise the rent. Folks, I'm starting my new graffiti painting business tomorrow, so if you need an office done, give me a call. We have brush, we'll travel. All right, let's move on to a couple things that I think that are very, very important here. One of them is a stock that we've had on our radar here. We don't do stocks too much, but we have several students that work for this company up in the Silicon Valley, and I wanted to bring it to your attention here. This is TWLO, Twilo, and it's a beautiful 3-drive pattern. Interesting, you'll see that the cycle from the highs matches perfectly. And what I wanted to do is to show you on the bottom, you'll notice that they don't match perfectly on the bottom. Folks, that happens all the time because these nominal cycles that Hearst had in his book only work about 1 or 2 cycles at most. And then they shift, they expand and contract by the Fibonacci sequence, which is related to, you know what, those lunar cycles and the other cycles that are far beyond the lunar cycle. So I believe it's astrological, but boy, I can only find bits and pieces. Don't know the whole story, but we'll try to get it down to a spot where we can actually look at, we'll be able to see how this thing actually works here on some of these things. Someone's asking the question, how long would this correction last in the stock market? Folks, I have no idea. This might be a major top. You won't know that until the Dow is down 500 points, and so you'll wait and see these days here. Look what happens between now. We got 23rd, 24th, 25th. Come in Friday, we're going to have a pretty good idea. We have a nice strong sell-off this week and a major fib number. That'll give us a pretty good chance of something good. We got to remember that this bottom that we made, let's just look at this because this is really powerful, folks. Oh, this is the daily. I wanted to do the weekly. Hold on a second. I'll put the weekly up. You can see that bottom there in the New York Stock Exchange Index on December the 26th. That is really, really important. But the one that is just as important, and the longer term one, let's just get it up here, is the weekly banking index. And this is where the money comes from, folks. Look at this bottom that formed. On the 26th, we were making a 382 retracement of the low from March 2009 to the tick. We were also making the 61% retracement from the low of January 2016 to the tick. It was also matching the high from 2015 to the tick. Bada bing, bada boom, as Columbus would say. That's a major bottom. Look how it came out of here. It's come out of here faster than any bottom over the last 10 years. Look at it. You can't make this stuff up, folks. You got to respect that. I mean, I'm short-term bearish, but you know, if this market keeps going up, it would not surprise me. I mean, that's a powerful move. You know, I know there's a lot of things wrong. Yeah, sure, there's everything wrong. We know we got strikes going here, strikes going there, but, you know, that happens all the time. You know, markets, you know, climb a wall of worry. Hey, nobody was more bearish than me than September and October. You folks know that. I mean, I've already told, you know, the whole story behind that, but, you know, we had a big break. We stopped exactly where we stood, and now we're coming out of here. If we go below that low of December the 26th, we'll know what to do. You know, that's the time when you get ready to get your shelters ready and get your bomb shelters ready and get all your prepared foods, because it might be bad. But the banks are actually doing pretty good right now. And that's where the money is, you know, so pay attention. I would love to hear some of these stories behind the scenes over in Davos, the things that they talk about, because some of them would probably curl your hair. And I got such little hair to curl anymore. Who knows what's going to happen. I want to talk just a little bit about another gentleman that put $1 billion. Let's just look at this. I believe it was, I forget which guy it was now. He bought $1 billion worth of stock in Starbucks. You see where that little red mark is right there? That's the week that he loaded up, right around $55 to $56. It went up to 69, and it's still up 33%. Now, not many people, with the stocks down, you know, where they were on December 26th, this stock was still, you know, heading to, it bottomed on December 26th, but it's held up extremely well. So we'll see what's going on. What was the story behind the bearishness in September? Oh, Maria. I once met a girl named Maria. I will get the number for you. Here we go. Let's take a look at this. If you like patterns, and we're going to go back down history, memory lane here. Here we have the NASDAQ. You'll notice the big ABCD through February and March, the 1.618 expansion, topped on September the 4th. It made a secondary Gartley pattern on September the 24th. It was a 3 drive to a top pattern at a 1.618 expansion, which was followed by that little yellow triangle that you see there. That is a Gartley sell pattern. From there we started down. We went down to point B. We rallied up to a 50% retracement. The lunar eclipse full moon on January 20th. You'll see that's where we were, exactly at the 78% level of point C, and that's where we are right now. That's what the thing, and we did the same thing in a lot of the others. I mean, we did all of these. I don't want to go do too many of them. We'll do the, here you can see the same pattern in the IWM. It was the same thing in the S&P and the Dow Jones, but you'll notice that the Russell small cap made a 3 drive to a, that was a butterfly pattern up there at point A. Same thing happened, but you can see the ABCD to the downside, and here we are again at the 78% retracement, the lunar eclipse full moon January 21st. And that was happening on Friday, so we'll see a little bit of a pullback in here. But we had one heck of a run here with the stocks up 7% in 1 week. Another one, hey, this is really good. Ruby says, do you think luck plays an important part on trading? Ruby, I will tell you something this. Luck plays, in my household, luck plays 100% of what happens in trading. Do you know why? Because Sarah's last name is Luck. So that's the reason. Other than that, no. It's all based on probability and risk control. Luck has very little to do with it. Some people are lucky. I happen to be one of those people, but that's neither here nor there. So really, luck has nothing to do with it. If you rely on luck, you're waiting. Yes, luck is where preparation meets inspiration. I think that was Henry Ford or somebody like that. 877-927-6648.
Great moments are born from great opportunity. And that's what we have here, folks. The opportunity of a lifetime for most. I'm Steve Rhodes, the 2018 Market Timer of the Year. And on Thursday, January 24th at 4:15 p.m., I'll share with you what I see as the next great buying opportunity. This free workshop, sponsored by Ninja Trader, is available to everyone. There's no gimmicks, no credit cards, no lengthy sign-up, and you don't have to be a subscriber to my award-winning daily newsletter service, Mastering Probability. All you need is a name, email address, and contact number. Just click on my name on the homepage of TFNN.com to gain access to the live or archived version of the next great buying opportunity. Folks, everything in life happens for us, not to us. The fact is, this workshop is happening for you so that you can learn how, why, and when to take advantage of the next great buying opportunity. Timing is everything. So sign up today on the homepage of TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, the final chart of the day will be Bitcoin. As you notice, we've been waiting for the Bitcoin to get down to this 3350 level. We got down as low as 34 and change. We're trading around 3,500 right now. This is a Gartley pattern. This is the first buy signal that we've had in Bitcoin in a very, very long time. Remember, the long-term ABCDs going back to 2010 in Bitcoin come in at 3,800. So we're $2,500 below that, which when you're considering the price level we're at, that's not very much on a statistical basis. The reason why I bring this up is because it's not about cryptocurrencies. It is about blockchain technology that some pretty smart people think is here to stay and way beyond my pay grade. But we're going to watch it technically just to see how it acts, because if I can just change one fundamentalist into a partial technician, during this time here at TFNN, that will be something that I always hope that I would be able to do. So pay attention to that. The other one, folks, is that chart for Deutsche Bank sure doesn't look very good. We're trading around 770 this morning, and you know, it's been really available to see what's going on. So we'll have to wait and see. So what we're going to do here is keep an eye on some of these things, and we will be moving on to one other chart before we leave us, and that is going to be, hold on, I'm just trying to get it up for us. Let's be patient here. That's the VIX index. We write down at that major support here on Friday. We'll probably be up a little bit today, but that was a really strong support. That's not a 135 pattern, folks, because it doesn't have the symmetry, and we are not quite at the 78% level. But the VIX index, even though it does follow the ABCD patterns, doesn't always line up, you know, the way we think it's going to line up. So let's pay attention to that, and we will get it moving for sure. So that's what we're watching. So live every day in an attitude of gratitude, folks. And
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
David White's newsletter, The